Yo, what's good, trader? Welcome to another video on my page. Today, I'm going to be talking about displacement. All right, so displacement has been one of the key things in my strategy, and is one of the key things in my strategy that I always look for. Without it, I don't enter a trade, right? And some people might think that displacement means nothing, but actually, displacement means everything. Displacement makes you to know when the big traders are into the market, or when the market is flowing. You get what I mean? So displacement will let you to know when to enter the trade and when to exit the trade. Okay. So first of all, what is displacement? Displacement actually means a large movement towards one direction. Right? It actually means a large movement towards a certain direction. For example, this is a displacement right here. This movement to the upside like this, for example, is a displacement. Right, this is a massive movement to the upside. See, there isn't a single bearish trade, a single bearish candle that equals a displacement. That means the buyers are aggressive in the market, which means that the market has changed momentum towards the upside. And another thing you should look out for in displacement is the breaks. Is the displacement giving a break? Is it breaking a structure? For example, look at this breaks above this liquidity point. That is a displacement, a good displacement. It also breaks above this point, right? That is a good displacement. But what I'm just trying to say is this is a displacement. It's an aggressive push to a certain direction to the upside. Same thing goes to this point also. This is also about displacement. Right. So some traders they enter immediately, they start seeing displacement. Right? They enter immediately, they start seeing a strong displacement. So displacement is one of the confluence people I hardly hear people talk about. I hardly hear people talk about displacement. I can even say I haven't seen any trader that talk about displacement in their strategy. All what I hear is break of structure, change of character. They just keep saying things. You get what I mean? So I haven't heard people talk about displacement or enter this market when you start to see volume. So displacement is kind of equals to what? Volume. Right? Displacement is kind of equals to what? Volume. Some people might think volume and displacement are two different things. No. Displacement is equals to volume. Right? Once a volume is into the market starts moving aggressively. So it started creating displacement. That means markets are moving aggressively to one more certain direction. As you can see right here, market are looking. You can see, for example, is an aggressive move to a certain direction. Let's say, for example, look at this. This is a 4-hour candle, right? We are creating higher highs, higher lows. Right. So now the higher and higher low, there is a certain point where we are going to be looking for break of structure, which is going to be this point right there. Right, this is where the break of structure is going to be right there. Now, right, so unlike other pairs that market moves gradually to create a break of structure, you see we have this massive movement to the upside that breaks above the previous high. This is what I call a displacement. So now your work as a trader is to start looking for an entry from the higher low to the previous high, right? So you see this box, this is where you want to start looking for your entry. So what can your entry be? Your entry can be any kind of stuff. Your entry can be a break of structure, can be any kind of stuff, right? So let's see, for those people that use an entry, right? So your entry can be any kind of stuff. So you only want to enter a trade when you've seen that there is a valid displacement. So you can find displacement on 15 minutes, you can find displacement on 1 hour, you can find displacement on 4 hours. You can find displacement in any time frame, but I still prefer looking for displacement on the 15 minutes, because this displacement on the 15 minutes it helps you get into a trade earlier, right? And you should look at displacement. You should find a displacement on the 4 hour. You will be expecting you might be expecting a pullback before you can enter a trade, because if you don't wait for a pullback, right, you are going to be, your stop loss is going to be very, very high. It's going to be a very, very big stop loss, and you don't want that, right? If you don't want that, you're going to cut your profit short, and your risk reward is going to be affected. Right, so I still prefer looking for a displacement on 15 minutes, and once I get a displacement on 15 minutes, I enter a trade. Let's say, for example, remember this is a 4 hour movement right there. 1, 2, right there is a 4 hour movement right there. Let's see what 1 hour to also do. Okay, so fine. This is the same thing as the 1 hour. Alright, this is the movement. Now, remember this was a pullback of the 4 hour. This movement right here was a displacement. Alright, so what we want to do right now is to look for displacement on 15 minutes candle. That is how I find my displacement. So I look for the displacement on 15 minutes candle, 15 minute time frame, I mean. And as you can see, we have this movement. Higher low. Sorry, higher low. Then boom, we got this displacement. Right, truth be told, I don't wait for any pullback on 15 minutes. Right, I still prefer being in trade, then it has its pullback, right? So I can still secure the position. So we got this block of structure. This is where the block of structure lies, right? And we know anything above the previous high signifies buyers are already in the market. You get what I mean? So now we've got this break above this aggressive break towards it, and what I do most of the time is I enter immediately and I place my stop loss beneath the previous low, right? And I target my 2:1. Alright, then once my 2:1 got it, I leave the other trade to play out by itself, which can give me extra profit. Alright, so as you can see on the 15 minute time frame, I see we've gotten multiple displacement move in the 15 minute time frame. Look at this, for example. We got this pullback, boom, another pullback, another displacement, another pullback. Okay, we don't have any displacements here. Let's add this. But you can see every displacement that got it. Okay, aggressive breakthrough above that, boom, the market buys. Market aggressive breaks above that, boom, the market buys. You get what I mean? So this are what? Sorry, displacement. So this isn't a displacement move because we've had a bearish candle right there. Good. So something like this. This is also a displacement move, aggressive break above the upside. So we've known the what bearish move without stop loss being there, and can go for a ride. Though it's not up to 2:1, but at least the displacement works. So displacement signifies that a certain direction in the market is getting aggressive. It can be the sellers, it can be the buyers, it can be either of those, right? So once you see a displacement, know that a certain side in the market has power. For example, look at this, boom, aggressive breaking up, like boom. And what do you see? We enter and that immediate displacement, put our stop loss beneath there. Cutting our 2:1 already. Alright. So displacement is one of the key things you need to understand in the forex market. So depending on where you get your displacement from, but all I know is it works. Displacement works, and I've seen some traders that really trade displacement, and they really made some funds just using displacement. But for me, I advise you use the displacement on the 15-minute time frame. Then you can use 1 hour and 4 hours to look at structure. But you see the good displacement on the 4-hour candle, I advise you wait for a pullback or a retracement. Then you can look for another displacement within that pullback that's going to let you to ride the trade towards any direction you are interested in. Right, so displacement is one of the key things I rarely hear traders talk about, and this is one of the key things in the forex market, because you don't want to enter the market, you just don't want to enter the market because of the other block, or imagining you want to see the real movement that this thing is already moving, like people are already in this trade, this movement is already getting strong, then you want to follow with the trend. So once for the other block trader, once they see another block and they just place it and they just map out this. Okay, this is the liquidity, this is an inducement, like where the usually do store this an inducement, this is the mark, the way they do that stuff. Okay, like then they do stuff like that. They just enter, they place a limit here, and they don't want to know if there is power in that other block or whatever bigger block that they are drawing. They don't want to know. They just place it there and they just let market do stuff. But you want to enter when you've seen that this is where the crowd is going to, this is where the movement is. You want to follow with it, right? You don't want to be assuming. Assumption kills in the market. You really want to enter when you see there's a flow here, right? Now let's take for example to this the trade I missed on Friday, right? So the way I take my trade, I take my trade in 2 ways. The first thing I look for is liquidity. Yes, liquidity. The market will have to stop some people. You get what I mean? The market will have to stop some people. Then once it stops some people, other big traders pump their money, take their money, they pop to the other side. So liquidity, there's a buy side liquidity and there's a sell side liquidity. So let's say for example, there's a bunch of liquidity down there, right? On this different stock, there's lots of liquidity there, and there's another liquidity right on this right side. So let's say the market is going to take on liquidity, then move to the other. So the market moves in liquidity. So you have to take liquidity from this point. Once you take liquidity at this point, you just don't want to assume that this is the liquidity the market takes. Market might also be interested in another liquidity beneath this also. So if you're a trader that don't work with displacement, you immediately enter the market, you've also turned to what? Liquidity. Let's say you assume that this is liquidity, and market be like, okay, find the liquidity, but I'm still hungry for more. Market still wants more liquidity. Market can decide to go down again. So you that enter a buy position from this aspect, from this point in time, you've taken an L already. And you'll be like, this is my strategy is shitty. Bro, no, you weren't patient enough. You did not confirm, right? So see another liquidity the market is interested in, it goes down again. So you as a displacement trader and as a patient trader, you want to know that this is the perfect time to enter the market. You wait patiently and you see a displacement and fine, this is the movement. Then you enter the trade and you know that okay, fine, this is a displacement. Market is interested in moving now. You cannot ride the market to any sell side or S side liquidity. Now, to cut that story short, let's take for example, the first thing I do is I look for liquidity on the 1 hour time frame. And like they said, you look for liquidity on 1 hour. You look anything that makes you to analyze on 1 hour time frame. You're going to look for your entry in 5 minutes. No, I'm not that kind of trader. I look for my entry on the whole 15 minutes, because the 15 minutes tallies with the 1 hour, and 1 hour is the sweet spot. Also, 15 minutes is also the sweet spot. So 15 minutes is the sweet spot because if you are in a trade in a 15-minute time frame, yeah, equivalent in the same movement as the 4 hour. So 15 minutes, 1 hour, 4 hour, those are the sweet spots. 1 hour is the sweet spot as a trader, as my strategy tells me, or with a lot of markets I've done. 1 hour is the sweet spot for me and for this displacement, right? Because if I enter the 15 minutes, I know that now I'm rocking with a 4 hour time frame. So the 4 hour is moving aggressively. I know it's, it creates a good structure. 15 minutes creates a good structure for you to use. If you can use a trailing stop loss, or if you want to start, you start when you see an deposit break and stuff like that. So 15 minutes is a sweet spot for me, and 1 hour is a sweet spot for me if I want to make my or do my analysis. Now let's see what I'm talking about. On this very day, I've been in a loss through 3 hours. I've been in a losing streak for 3 times now. I think 3 tries now. Yeah, no, 4 times. Yeah, first 2 was caused because of me. I went out of market out of fear, and I ended up losing because I entered at that position. I wasn't patient enough. I was too emotional. And the second, and the other 2 was okay, fine and good. The market was being shopping, and market does what it does best. Take people out. And now look at this 1 hour liquidity. We've gotten this liquidity graph here. Yeah, we've gotten this liquidity graph here. I don't know, for people that think this is a liquidity graph, no, I don't count it as a liquidity graph. You can, good, fine. Let's say this is a liquidity graph, right? Truly, this is a liquidity graph, right? Market is meant to come and take this liquidity. But now this is where displacement comes in, right? From this liquidity point, I've seen a displacement. Then I knew automatically that market is not interested in this. So this helps you to avoid mis-entry and stuff like that. So immediately I saw the displacement, I knew, okay, market is not interested in this liquidity point. So I entered, I ride with it with full confidence. You get what I mean? Trusting in my strategy. So what did I do? I saw this liquidity sweep right here. All the way for 15 minutes. I wait for a displacement break. Now, as you all have no market structure, market moves like right? Okay, now we've seen this. Boom. This is a movement. This is not a displacement yet, but we have this retracement back, right? The one thing that I love is to see liquidity again being taken during the displacement. This is a liquidity being taken, right? So this is just like sharing on top. Get what I mean? Once I see displacement, liquidity taken off 15 minutes or not, I don't care. I just enter immediately. I see the displacement after I've seen my 1 hour liquidity, right? But once the displacement now comes with a liquidity sweep, I'll be like, yeah, that's it. That's the real deal there, right? So this comes with liquidity sweep, because on this very day I was so down. I won't let you so down, and I just be like, oh no, I drew all my capital, my remaining capital, because that's all what I had left. I just like, I don't want to trade for today. Then I came back to the chart in the evening and I checked the chart, and I was like, oh wow, I would have entered this trade if I had been interested in taking any trade today. But now let's look at this. We've seen a liquidity sweep, but that's one thing. That's just sharing on top, and we are only interested in the displacement. And as you can see, we've got seen the displacement. This is high here, right? This is high. You can see, boom, aggressive move to the upside. Poof. Right, aggressive move to the upside. And what do I always do? I enter immediately, it breaks above that, and place my stop loss. I can place my stop loss here. Depending on how often I've getting stopped out. But actually, I will have to put my stop loss below this, because this is the liquidity sweep right there. and that's a protected low. Putting a stop loss right there, and 5.3 pips, very small, very minimal. Targets a 2:1. Once that plays out, I leave the rest. I leave the other position to go and just like to fetch me other money. Now, to God be the glory. It was the hell of the ride, man. Hell of the ride. Yes, hell of the ride. Giving 13.5. Right, so if I want to stack up position, what do I do if I want to stack up position? I wait for another displacement, right? But actually, I didn't see any displacement right here. So you rejected me. You see, I rejected me. Displacement right there. So this I can call displacement was this, and I won't have been interested in this actually. But you will see displacement, and another one I can call displacement was this. Yeah, was this. Well, it's first got tested, and I wouldn't have taken it as displacement. I'm just saying things being honest, but I would have taken this as displacement here because it comes with a liquidity sweep right there. And the payment, so I'll have entered another position right there. Stop loss right there. The market would have closed during those times. And that's just it about the displacement. That is kind of my strategy all in one video. First, market isn't using a good strategy is the least thing you should worry about. One thing you should worry about is your psychology and mentality. And that will be it for this video. I'm going to see you guys in the next video. Catch you.